I welcome everybody to this webinar concerning MiFID for the insurance sector, also called ASSUR-MiFID. For those who haven't met me yet, I'm Heidi Courtois, Director for the business unit focused on the insurance sector and medium-sized banks, a business unit I started approximately 3 years ago. Previously, I worked 9 years in the banking sector and 7 years in the insurance sector. The purpose of this webinar is to give you some highlights on the legislation itself, our opinion on the impact in the sector, and our advice in respect of a potential implementation of the MiFID legislation. During this webinar, you can raise your questions, and we will answer some of them during the webinar, although other questions will be answered at the end of the webinar. Also, we will raise some questions ourselves, and the results of this poll will also be shared with all of you at the end of the webinar. So MiFID II. MiFID II is a European legislation. The purpose of this legislation is really to establish a safer, sounder, more transparent and more responsible financial system. It's at the best interest of the customer. So the overarching principle of this legislation is the best interest of the customer, with a focus on giving enough information and advice for the non-professional buyer. For the banking sector, MiFID has already been implemented for the distribution of financial products such as shares, bonds and investment funds. And this European directive dated from 2007, also with the objective to protect better the investors. For the insurance sector, in Belgium, in the Belgian context, MiFID is part of Twin Peaks 2, and the deadline is set on the 30th of April 2014, so tomorrow in fact. But it encompasses quite some differences with the regulation for banks. So the purpose in the insurance sector is to inform the customer better and more transparent, and to protect the client when purchasing insurance products, especially when there is an investment or saving component. The second pillar is at the moment excluded out of the regulation. One of the examples we can point out as a difference with the implementation in the banking sector is the fact that execution only is excluded for the insurance sector. Execution only can in fact be considered as a pure sales transaction. The legislator considers that in case of insurance, the distribution is in most cases always done through advice, therefore not execution only. And this entails the alignment of the risk profiles of the customer with the proposed products. Besides the fact that this regulation has an impact on nearly all departments of the insurance companies and brokers, such as operations, risks, sales, compliance, finance, underwriting, claims, marketing, the difficulty lays in the timing. You see that the royal decrees have been published on the 21st February 2014. The working documents by the FSMA have been published mid-April, and the ones concerning labeling and publicity have been signed by the King a couple of days ago. The question is if they will encompass more details on, for example, inducements. In general, Twin Peaks makes a difference between different categories. First category, all life insurance with a component of investment or saving. For example, Class 21, Class 23 insurance products. Second category, life insurance with no saving or investment company. For example, the pure disease insurance. And then we have for the non-life insurance, these are divided per branch. For example, fire insurance, liability, etc. The main focus of this legislation lays on the life insurance with component of investment or savings, but all insurance categories are impacted by this legislation. MiFID intent, as I said, is to protect the customer and especially those who have no knowledge nor expertise to be considered as a professional buyer. For the actors which are considered to have enough professional knowledge, the MiFID regulation is out of scope. So what is in scope? It's the insurance mediation, especially the retail one, and all actors such as insurers, brokers, agents, bank agencies who distribute insurance products, etc. The MiFID rules apply to all insurance mediation that have no implication at this stage on Pillar 1 and 2 and placed in Belgium. Excluded are self-insurance, again considered as professional buyer because it concerns companies and groups who do self-insurance. Then we have the accessory life insurance under very strict conditions, similar as the one covered under the law Kouwenbergs. And then reinsurance mediation is excluded as well, and the big risks such as aviation, railway, credit for companies, insurance for large companies, all that is excluded from the MiFID legislation. The working document that was released recently by the FSMA explicitly states also that risk management is excluded as long as it does not encompass an activity of an insurance agreement, which is logic, in my opinion. MiFID also entails the principle of proportionality. This in contrast with the Solvency II legislation, meaning that for MiFID, for the smaller insurance companies and the smaller brokers, a kind of light version of MiFID will be allowed by the regulator. All transactions as of the end of April should be MiFID compliant. We mean with transaction, or the regulator means by transaction, for example, the initiation of an insurance agreement, the modification of coverage, the arbitrage between the underlying funds, an additional deposit in a clause 23 with a choice of funds. So in fact, each time that there is a possibility that the client profile changes, or that there is a need to have a review on the alignment between the profile and the proposed product. What are the involved actors of this legislation? Well, the regulator has created a new concept, the one of tied agent. The tied agent will, via one or more agreements or conventions, be allowed to perform insurance mediation in name of one insurance company or several insurance companies, as long as it does not concern the mutual competing products. So, for example, the categories that are considered as mutual competing products are life insurance with the saving and investment component, life insurance without a saving and insurance component, investment component, and then the non-life for each branch. Example, an agent with exclusivity for life insurance with company Y and non-life with company Z can be tied for both of them. But an agent with exclusivity for clause 23 with company Y and clause 21 with company Z cannot be considered as tied with neither of them, because clause 23 and clause 21 are both insurance products of life insurance with an investment and savings component, and therefore considered as mutually competing products. On the other hand, we have the brokers and the non-tied agents, which work on behalf of various insurance and which in fact are independent of the insurance players. If we look at the responsibilities, well, what is accepted based on that classification of categories? An agent can be partly tied and partly non-tied. Insurance mediation for insurance can be combined with mediations for banking products. What is not accepted is the combination between a tied agent, for example for life, with a company, and then a broker for the remaining part. So the combination tied agent and broker is not accepted. Exclusivity, that is meant exclusivity on some products, does not have to be explicitly mentioned in the contracts. It are the facts that are prevailing to point out if there is a question of exclusivity or not. And who needs to report the fact of being tied or not? Well, both involved parties, the tied agent and the insurer, and the regulator will then compare both lists. Now, why do we have these concepts of tied agent, untied agent, brokers, etc.? Because they define the responsibilities. As said, an insurance broker or non-tied agent and all its sub-agents, they act under their own responsibility. So the broker is responsible itself to implement MiFID. In respect of the tied agents and its sub-agents, they act under the responsibility of the insurance company. So there is the insurance company who has to make sure that the tied agents follow the MiFID legislation. So the intermediary that combines a bank agent and a tied insurance agent acts under the responsibility of the insurer to whom he is tied for the insurance mediation, and under the responsibility of the bank for the investment funds. A bank agent who is also an insurance broker acts under his own responsibility for the mediation and under the responsibility of the bank for the investment funds. If we now dig a little bit deeper into the MiFID legislation, the most fundamental rule in this legislation, which is also called the MiFID Constitution, is the duty of care. The principle is to obtain loyal, fair and professional commitment to the client's interest. This rule is only applicable for the insurance mediation with advice. And advice is a question of facts. The perception becomes reality. Even if the client did not ask for any advice, in case of face-to-face, the legislator will consider it to have advice. So first of all, there is a need to collect information from the client, which is practically done through some questionnaires. Those questionnaires are not dictated as such by the legislator, but it's a practical way to collect that information for the client. And based on the answers of on those questions, you can use an algorithm to define your risk profile. The risk profile can be conservative, defensive, neutral, dynamic, aggressive. In fact, as a broker or as an insurance company, you can define the risk profile as if it's enough argumented, of course. The client itself can't choose its risk profile, but the client can always opt for a less risky profile than the one defined by the algorithm used by the broker or the insurance company. Based on the risk profile, through a product algorithm, the products that can be offered to the clients will then be defined, the products that are in line with the risk profile of the client. Now, if the client does not give enough information, does not respond to all the questions, the intermediary or the insurance can't give any advice, and so will not be able to offer products. Once the profile has been determined and products are presented to the client, and in that case, if the client wants to buy other products than the one proposed, then the client can buy, then that product can be offered to the client, and a disclaimer might be an option in that scenario. Now, this is a view on how, in practice, an insurance company or broker can make this process more efficient, but the regulator considers that standardization might sometimes lead to abstraction. So the intermediary or insurer will need to ensure that the choice of products will take into account all individual answers of the client. For your information, Australia has already developed some questionnaires for the different categories and has defined 4 standard client profiles. We therefore assume that a lot of actors will use those, but of course banks have their own profile, and some banks and bank insurance groups might also choose for an integrated approach which will differ from the Australia profiles and questionnaires. In respect of the tests, so we have 3 kinds of tests based on the product type. We have life insurance with a saving or investment component with personal advice. Then the most elaborated test needs to be used, the suitability test. What is the purpose of the suitability test? Is to collect information on the knowledge and the experience of the client, its financial situation, and the investment goal. The fact of giving information to the client will not be considered as enough proof that the client has knowledge of the product. The collection will need to be enough detailed. Knowledge and experience are also two different things. It's not because a client has in the past bought that product that the client has the knowledge of that product. So you will have to ask enough detailed questions to point out what the level of knowledge of the client is on that kind of products. For life insurance with the savings or investment component that are distributed without personal advice, which in fact are the online distribution channels, there the appropriateness test will need to be used. And there it's a collection of information on the knowledge and experience of the client. For the other insurance products, there is the requirement for a needs analysis. Now, that is not a new concept. In fact, it already existed, but was not always used. And now the regulation is confirming the fact that for all insurance products, a needs analysis has to be performed, which is also known as the Jan de Makelaar questionnaires. And it's to ensure that all proposed insurance products are in line with the requirements and the needs of the client. Another important aspect of the MiFID legislation, so we had the duty of care, is the duty of loyalty. And the duty of loyalty, the most important aspect of that duty of loyalty is the obligation towards the insurance company or insurance broker to avoid or to prevent conflicts of interest. And therefore, there is a requirement for an effectively defined and written policy, but also an update of all occurred incidents into a register. A register which is not that easy to implement when we consider, for example, an insurance company that works with tied agents, which are often also independent agents. Conflicts of interests are seen in really the large perspective from the client. So all actors or potential involved persons need to be considered here. Managers, employees, persons to whom intermediation has been outsourced, agents, brokers, beneficiaries, victims in case of an accident, so all potential involved persons. Now, in case that there is a potential conflict of interest detected, there are 2 possibilities. One, the MiFID constitution can be followed, and then there is a need for an action to manage the conflict, and transparency towards client is required. The second case, the MiFID constitution can't be followed anymore due to that conflict of interest, and then no servicing is allowed. Examples of conflicts of interest are financial incentives to advantage one client more than the other one, perform the same activities as the client, and also inducements are considered as a potential conflict of interest. And that brings us to the next point, which is in fact the hot topic of this legislation at the moment. The law states that there is a prohibition of compensations or advances, but with 3 exceptions. Exception 1, the remuneration, if the remuneration is paid by the client, then, so we talk about commissioning, etc., then the client needs to be aware what part is paid as remuneration for the intermediary and what part is premium. Second exception, an advantage offered by or to a third party. Then the client must be aware of the existence and kind and amount of the advantage. And secondly, it has to be in the advantage of the quality of service to the client. Third exception, inducements that make the transaction possible, such as legal allowances, so taxes, etc., legal costs and reinsurance premiums. Remunerations that are not in line with these rules will have to be phased out. Now, the regulator is well aware that most of the contracts between the insurers and brokers and agents will be reviewed by the end of the year. So, therefore, an action plan will need to be prepared. This rule of conduct is different for a broker than for a tied agent, and this is really a discussion point. The tied agent, as you know, falls under the responsibility of the insurance company. So in fact, in case of tied agents, less transparency is needed. And inducements such as travel incentives, which do not fall under the 3 exceptions as mentioned before, might still be allowed, but only for the tied agents. So the broker federations are trying to change this aspect because of the level playing field between brokers and tied agents. At this stage, the regulator has not been very clear about this topic. Without going in too much detail, these are other aspects of the MiFID legislation and the information to clients. This concerns foremost the pre-contractual information. Information needs to be correct, clear, and not misleading. The information has to be given to the client before any proposition is made, and in order to enable the client to take a decision with full knowledge. And the information given to the client has to involve the product, so product information, which is in most cases prepared by the insurance company. But there also is a need for information about the intermediation itself. And there it's or the insurance company or the broker or the agent who will need to prepare that information and distribute that kind of information. Data storage is also obliged. So there is a need for registration of all activities of insurance mediation. Now that part will be more detailed in a working document of the regulator, which is expected before the summer period. Client files, so the file with the documents on agreements of the client. This should be considered as a control mechanism for the regulator. Now, if we look at the potential sanctions of this legislation, they can't be underestimated. If you look at the slide, there are some. There is even a penalty to stop the sales activities. There are penalty payments, quite some civil actions. The mystery shopping is also a new concept that the regulator might use. The same for the reputable presumption against the intermediary, which in fact means that if there is an omission in the code of conduct and there is in fact a loss suffered by the client with the link that shows the relation of cause, then it's considered as being an error by the intermediary. And rebutable means that it proves that the proofs can be that counter proofs can be used by the broker or the agent. Now, if we look at the potential impact on our sector, the insurance landscape, in our opinion, will be impacted in several ways. We give here 6 points, but of course there will be much more impact than that in our opinion. But in our, the first one, the professionalization of the brokers. We think that the smaller, the less professionally organized broker will have difficulties to cope with this regulation. We can deduct that some of them will stop their activities, sell their portfolio. Others will consolidate to obtain a better position on the market. This is really a reaction that we have seen in the Netherlands also after the implementation of MiFID. Some brokers might decide to specialize even more and become niche players. And certain brokers will ask to become tied to an insurance company and therefore will need to sell part of their portfolio as well. The large professionally organized brokers and niche players will need to adapt as well, of course. This channel will need to demonstrate its added value through advice. And also in respect of inducements, changes will need to be integrated. We see already that some brokers are thinking of working more on fee basis, also for the retail business. Brokers will need to differentiate on other aspects besides commission, such as tools, reporting to clients, marketing, product offering, quality of service, etc. We also will see an evolution from a push model to client-focused supply model. So a less purely sales-driven approach, putting the client requirement more central in the process to create an offer. We expect an increase of internal market competition between insurers and brokers. Insurers will need to decide whether to develop different distribution channels in parallel without creating an internal competition. In case of bank and insurance groups, there will be a pressure to increase the number of tied agents. Bank agents that are not part of a bank insurance group will need to make a choice of becoming tied or not. We also expect a growth of the distribution through the online distribution channel. We focus on 3 observations to conclude that in fact the online channel will be even more successful. The brokers will less focus on commodity products, since it is more difficult to demonstrate their added value and therefore argument their remuneration. Moreover, a lot of those operational tasks that are often still performed by the insurers will now have to be performed by the brokers, since they are clearly responsible. A second observation is the fact that the setup of a tied agent network entails a large investment and a clear competition towards brokers. So insurers might be a little bit skeptic on that. And third observation is the comparison between commodity products will be managed by some comparison tools which are already accessible on the market right now. And then a 6th point, the diversity of questionnaires and profiles. And we have the questionnaires and the profile definition of Afziralia, but also of the banks. So there will be difference on the market. But what does that mean? Well, if the same client might have another profile at one company or broker compared to another, might receive the advice to buy another set of products depending on the insurance company or broker, because other algorithms are used. When we have supported quite some insurance companies and brokers with our advice and with the implementation of MiFID until now. And this is in fact a resume of the sets of advice that we can share with you at this stage. In order to have a current view of the level of responsibility, there is a clear need for all insurers, agents and brokers to review their contracts and to have a view on the sales volume per distribution channel or per product line. Based on this as is situation, the market evaluation, the requirements of the clients and the economical context, each actor will need to define its strategy and positioning, and this in respect of distribution channels, products, segments, clients, targets, etc. This strategic choice will lead to a value proposition per distribution channel or line of business. And per distribution channel, an insurer will need to choose whether to differentiate in price, product offering, operational services, offered inducements, and so on. Also in respect of marketing and product development, each actor, broker and insurance company will need to realign with MiFID as well as with the new market reality and reactions. As we mentioned earlier, there is clearly a need to make this rollout very efficient. The creation of a product algorithm and profile algorithm will be an optimal option. Furthermore, it is essential for the insurance companies to structure the operational processes as such that the back office process is the same for the different distribution channels used. The front will certainly be different, meaning that the way the information is collected, the questionnaires and the algorithm to define the client profile might be different per distribution channel. But the process between the profile and the chosen product should be independent over the distribution channels. And there we are at the end of our of this part of the explanatory part of this webinar. The purpose was to give you some highlights on the legislation, comments on how we see the sector evolving, and our personal advice. I would say don't hesitate to contact me even after this webinar if you want to share or exchange some ideas. And the results of the polls, I see it will be shared afterwards together with the recording. So you will all receive a copy of the recording and the results of the polls, of the questions raised. I would say if you have any questions, don't hesitate. So I leave it up to you to ask some questions. So there are no questions, so I propose to close this webinar, but my coordinates are in the slides, so please do not hesitate if you want to share some more ideas, some further ideas on the topic. Thank you all for your attention.